I like Alibaba. I like it as a symbol. I like it as a defensive play. This company has been around. It's basically the way that we can get things. They're the middleman for manufacturing in China, and getting whatever you can put your mind to here manufactured there. They become the middleman. They take a lot of the risk away, and in return, they're a viable company. And you could see just in the last earnings, they are a viable company. They make money. They're even starting to give dividends to their investors. And the scoop is you're right. They've been under the radar, but they've been operating very well. I'm not necessarily, I want to do premium trading. I want to create income during this uncertain market, especially through the rest of this year and into the next year. Who knows what's going to happen? Just on an aside, in addition to some of the volatility here in the States, I mean, China just dropped a rate, did a rate drop on their central bank, which, they're the second biggest economy in the world right now, and they're worried about growth. France and Germany are all doing things. They're pretty big economies. Germany's a very big economy. Um, they're all talking about growth. So this is a global thing, a global slowdown. It's not just here in the States. In fact, a lot of investment, if you look at the bonds market, a lot of investment dollars just in the last 2 weeks have went from yen intensive investments to dollar intensive investments. So one of the good things for these US markets is that we are still the de facto defensive play. When people are afraid of what might happen in the world, their money comes into the US dollar as an investment, right? Because we're still considered, the most steady place to invest. So with all of that said, I'm okay that Alibaba is going sideways, and I'm okay looking at this company to create a income stream. If I go back in my charts and I look at the last year, I can see that around the end of fall, like the beginning of the winter, basically around October, November of last year, we started in this sideways channel. And I'm comfortable with that channel. That's where we've got support around maybe $70, $71, and resistance around $80. And now I'm going to zoom back into the more current time frame. This is the last 6 months. We got a signal. This is a signal off of my moving average crossings. We got a signal about a week ago. We got our follow through. I'm not sure. It could be that we come back for a double top. So I wanted to point out this symbol, especially for those folks with bigger portfolios like I do, because Alibaba has a very active options chain. There's people trading these options. There's a lot of open interest. There's a lot of daily volume. The bid-ask spread is small. You can invest a lot into the options chain. It's not one of these symbols where if you have any sort of a big portfolio, you might be being the only holder of the options. And so I wanted to highlight this one because this is a good place for folks to make money. I don't know whether or not we're going to get the next reversal is going to be a top or a bottom, but I put in my notes, Sip, the strategy for both. Maybe we can copy and paste that into the chat of the broadcast. But if we come up to a top, this would be a great opportunity for us to short some Alibaba and or buy a substitute put option. So either you're going to sell some stock or buy a substitute put option. If instead it continues on the downward slope that it's on, then if we bottom out at that $70 to $72 mark, then instead of shorting and buying put options, we want to go long and buy call options. It doesn't matter, right? Because this is a sideways channeling stock, and what we're trying to do is establish some sort of covering position so we can then start the cycle of selling premium. So in addition to this quarterly dividend, we'll be getting, cyclical payback every time we sell premium. And that's what I want to get my position. Alibaba is a great stock to do that. There's so many opportunities with where it's channeling. Now, if it's a little bit too expensive for some of our investors out there, and you want to basically, price in the amount of risk you can endure. But if it's too expensive, then you can always go the way of thinking about doing spreads on this. Spreads are a little bit cheaper, whether it be vertical or diagonal spreads. But if you go that route, again, make sure you only invest as much as the risk allows you to. So size your position accordingly. But Alibaba is a great underlying symbol, and it's in a great pattern.